the sun shines bright and the seeds are sown. Portugal, it's the place to be. Join the community, come and see. Expats Portugal.
Excellent. Let's get going then. Thank you for being here this evening. The Expats Portugal webinar for the 6th of November 2025. How to manage your retirement savings in Portugal with our experts, Henry Kent and Jacob Shelton of Holborn Assets. Good evening, gentlemen. How are you doing, Henry?
Yeah, very well. Thank you, Carl. How are you?
I'm very well, thank you. Yep, it's getting a little bit cooler in Portugal, but still a fabulous place to be. And we're going to find out how to manage retirement savings tonight here. Jacob's also with us. Jacob, good evening to you. Lovely to meet you this evening and hear what you have to say. How are you?
Hey, great to meet you as well, Carl. I will say it is actually morning here. I am back home in Portland, Oregon right now, and not quite as warm as where I'm normally at in Valencia, Spain, but it's actually just absolutely dumping rain outside. But doing great.
Okay, well, great to have you here tonight. And you're, of course, used to the European vibe, and you're visiting the US temporarily at the moment. Great to have you both here. Let's have a look at what's in store tonight then on how to manage your retirement savings in Portugal with Holborn Assets. We will be, with Henry and Jacob, discussing key factors to consider when managing retirement savings as an expat and highlight some of the common challenges retirees face. And we will welcome your questions this evening, of course, as those retirees who are joining us here from Expats Portugal. Session is designed tonight to give you a clearer picture of what to think about when planning for life in Portugal, including, but not the only topics covered tonight. There will be other points and other information available, but certainly including tonight, essential financial factors to consider before making the move, how to make the most of your retirement savings in Portugal when you get here, how to remain compliant with both US and EU tax regulation, strategies for cross-border investing and retirement planning, common expat pitfalls and how to avoid them, of course, and to conclude a Q&A session. But do get your questions in as the webinar, as the presentation unfolds this evening, and we'll do our best to answer all of your questions. So, Henry and Jacob, over to you.
Thanks for that, Carl. Thank you very much for the introduction. Just to give a further introduction to myself, and I'll allow Jacob also to go a bit further on that. But my name's Henry Kent. I'm one of the senior financial planners here at Holborn Assets. I'll give a quick intro to Holborn in a second for anyone that hasn't come across us. But myself, I specialise in providing expatriate financial advice to residents here in Portugal that are non-US connected, as Jacob's here today to fill that for us. But Jacob, would you like to just say a few words while there's a short introduction going on?
Yeah, of course. As Henry mentioned, right, I'm really the US specialist here for Holborn Assets, help US citizens who are moving to the EU. I would say we're seeing quite a few right at the moment, particularly into Portugal, Spain, and France. And so, yeah, we will get further into what that really means for US citizens once they make the move into Portugal here in just a sec.
Perfect. Thanks, Jacob. So let's jump in. So for anyone listening today who isn't aware of who we are and what we do, Holborn Assets, we are a global financial advisory. We specialize in providing cross-border financial advice to expats actually in over 100 different countries around the world. And that's via our 21 international offices. However, myself, my team, and Jacob, we specialize providing financial advice to Portuguese residents. As a company, we were established over 25 years ago. And since that time, we've won multiple awards. And we currently have just under 4 billion in assets under management. But myself, I'm based in the Algarve region, where we have our main Portuguese office. However, a lot of our business is all done over the telephone, email, and Zoom. But we always welcome face-to-face meetings. Should you ever be in the Algarve region and fancy a coffee or maybe something slightly stronger.
And of course, Henry, known and loved at many of our meetups as well. That's a chance to get to meet Henry in real life as well at the Expats Portugal meetups.
Indeed, indeed. Some great meetups as well that we've been to this year. So jumping on, let's jump into the essential advice and considerations before making the move. I know the webinar today is focused on what to do with your savings and retirement funds when in Portugal, but these key financial considerations can assist and help with having more finances for when you're in Portugal and not falling into unnecessary pitfalls or tax consequences before. So, three of the main sort of considerations that come up on every sort of introduction meeting that I have with individuals who are looking to make the move. These are the three main points to consider. The first one is timing in regards to your finances. So many foreign sort of tax efficient accounts such as ISAs, TFSAs, these type of highly tax efficient structures for when you're in a country such as the UK, Canada, or elsewhere. Once you do leave that country, that source country, they lose their benefits and they no longer retain the tax efficiency that they once held once you're a resident in Portugal. So timing of these, whether you look at alternative structures or in cashing before, this could potentially save you a considerable amount of tax that's unnecessary if delayed until you're a Portuguese resident. Again, following that trend, within the UK, there's a term PCLS. It's your tax-free lump sum that you receive when you initially start taking from private and certain company pensions as well. While this is a tax-free lump sum under the UK or as a UK resident and under the UK rules, Portugal don't see that as tax-free. So it's worth considering, and if it's possible, if you're at retirement age and it's accessible and it makes sense, obviously this isn't a blanket case, it's very nuanced, but typically if you are eligible to take your PCLS, your tax-free lump sum, in the year before moving to Portugal, it's worth exploring because you're going to lose that tax efficiency once in Portugal. And then, as I've put there, early financial planning can help you manage these future tax liabilities. So I will include my details at the end, and also Jacob's as well, and my special QR code where you can book a meeting with me. But if you are considering and are in the process of moving and you're wanting to sort of gather some information and start exploring this, then we'll include our details there to reach out to us and have a chat. Number two is your property back home. Sell before or after the move. Once again, the majority of countries around the world offer main residence reliefs. So if you do sell, then capital gains is usually exempt. If sold as a main residence, this is obviously different in various countries, but in the majority, selling your main residence before becoming a non-resident, you do have your main residence relief, which if delayed, you will lose potentially. But also capital gains. Portugal, if you sell, let's say further down the line, there will be potential tax liability in Portugal if you're not under any sort of favorable regime. So I know it's difficult because, and I've been through this as well, and working with individuals and clients. If you are making the move, sometimes you may not want to commit fully because you may not know if you're going to be staying in the country full time, and you may not like it. You've done scouting missions, so it is quite a big move, but it is a consideration to take in before making the move because of them tax advantages. And then third and finally is the income structuring and timing again. So as I mentioned before, taking pension lump sums before making the move will mean that it's not liable for Portuguese taxation. ISAs, capital gains tax-free from a UK perspective. If delayed until Portugal, potential liability there. So these are the ones that typically come up time and time again. They are considerations. I'm sure that a lot of people on here who either have moved or are moving have thought about these, maybe not. But if you want to have a chat about it, like I said, I'll include my details at the end. can book in and speak with me, and we can talk through any situations for yourself and any potential liabilities. So, quick information on a survey that was done in 2023. This is for residents that are in Portugal who have NHR. It's fantastic moving to previously moving to Portugal, this favourable tax regime. Obviously, we all know it's come to an end now, and it's been replaced to focus on a different demographic. Not many people, and I'm seeing this more and more now as people are reaching out to me, didn't pre-plan early enough where they could potentially save themselves a lot of taxes by the time they came to the end of their NHR. And on this survey of 1,000 expats, it showed that only 27% of NHR holders were prepared and ready and understanding of what it meant for them once they did come to the end of their NHR, which I thought was, well, being in my job, I expected that, but it was quite surprising to be so low. But yeah, if you act within the first 2 or 3 years, and I'll move on to what this means, there are possibilities to secure long-term tax benefits through planning early.
It's a really good point, Henry, isn't it? Is it human nature of people just, they've thought to themselves 10 years, nothing to worry about? Is that part of the problem, human nature, just putting things off? And clearly it makes a lot of sense, doesn't it, to be prepared and not be taken surprised by this?
Indeed, I think so. I think that 10 years as well feels like such a long way off, but it goes so quickly once you're here.
Oh, yeah. Yeah. Yeah.
But yeah, so it's highly surprising. So, but what I wanted to sort of hammer home here was that acting in the early stages, you can reduce your tax liability considerably if you plan within the 2 to 3 years of being here. Obviously, if it is slightly longer, it's not going to have a major detrimental effect. But as we move on to the next slide, I'll show you. You can save considerable amounts over a sort of time period. And that's done by using a highly tax efficient structure called the Portuguese compliant bond. This is not available for US clients, as Jacob will touch on why that is later. But for all non-US nationals who live in Portugal, plan to stay in Portugal for the foreseeable future, the Portuguese compliant investment bond is one of the most beneficial future planning structures out there and available for your wealth, your investments, and your capital. It's highly popular among the expatriate market because it's available in multi-currency, so you can hold US dollars, euros, and sterling within there. But more importantly, it's the security and the tax advantages. The majority of these providers are based in highly regulated and secure jurisdictions. I'm not saying that Portugal isn't highly regulated or secure, but there are other EU jurisdictions that do have more security than Portugal has to offer. I would say most of them are based in Ireland for English-speaking expats, some in Luxembourg, so all contracts or service is English-speaking, but more importantly, it's time proportionate. So from a tax advantage, you can reduce your capital gains tax by up to 60% for holding for more than 8 years. And you can see this table here. For the first 5 years, it's taxed as any investment would be, and that's only on the gain element. It's not on the initial capital. After 5 years, so let's say you're in your early stages of NHR, you make an investment for your future income when you know that your taxes are potentially going to increase when you go into progressive rates. More and more individuals and my clients are going to offset that tax by using a reduction in their capital gains over this time proportionate relief. And furthermore, after 8 years, you receive that 60% reduction all the way down to 11.2%. These are quite complex cars, so I've tried to keep it as basic as possible with the majority of the information, but essentially the best way to understand it is similar to a UK ISA. While the funds or the investments are within the ISA, it has very good tax advantages. In the same way, you can make changes within that investment which don't trigger any sort of taxable events. So you benefit from the compound growth, so it's tax deferred. And within that structure, you can have any sort of global strategy or investment out there, depending on your risk profile, which we would complete risk questionnaires and define a strategy that's suited to you and allow your funds to grow in a secure and regulated, compliant way.
Of course, and nobody's expected to take all of this information in. No, you will not be tested on this tonight. If there's anything you don't understand, it's fine to get in touch with Henry or Jacob later on. And that, yeah, the legendary QR code will be the way of getting in touch with Henry. So book an appointment if there's anything that's not entirely clear. Henry will be more than happy to chat with you, as will Jacob as well.
Cheers, Carl. So then just moving on from this, I just wanted to give a quick example because, as I mentioned, it is quite complex. But essentially, in the most simplistic form, if you made an investment in your early stages of 100,000, after 8 years, you came to the end of your NHR, you have a sort of tax gain of an extra 15,000 from either pension income or elsewhere that you wanted to make up from your investments. If you decided to start drawing that 15,000 out of the Portuguese compliant investment bond, you can see here how it works. So there's a calculation made by the investment provider who calculates how much of that withdrawal is initial capital, how much is gain, and then because you've had the investment or held the account open for longer than 8 years, that 60% reduction down from 28% to 11.2 is withheld and paid to the authorities on your behalf, giving you a net withdrawal of 14,440. Yeah, a little tip as well that I always like to mention is if you are selling in Portugal, obviously there are ways to mitigate and reduce your capital gains liability if you're, let's say, reinvesting into a new property. However, if you do reinvest into a Portuguese compliant investment bond, as long as it is suited and compliant, you can offset any capital gains tax liability by using these type of structures. I've actually helped a handful of clients reduce their tax liabilities by considerable amounts by doing this, but there are requirements that you are retired and over 65 and the investment needs to be made within 6 months of the sale, and then the reinvested amount needs to generate an income, but you can offset any capital gains with these type of structures. So quite complex but highly tax efficient in various different areas. If you wanted more information, like Carl said, I'll include my details at the end. You can reach out to me and we can have a chat. I've done quite a bit of talking, conscious of that. So what I'm going to do now is to pass over to Jacob and allow him to cover his section on US connected clients.
Well, perfect. Thank you, Henry. And for all non-US citizens that are living in Portugal, that Portuguese investment bond is so important, such a great tax planning tool. And for US citizens living in Portugal, as Henry mentioned, we don't have access to any of it. So, that's actually a great transition here to this first slide is that as U.S. citizens move to the EU, we often look around and wonder why we can't access a lot of these great investment tools and investment accounts. Many firms just won't accept our assets in the front door. And that has a lot to do with FATCA reporting, where those firms actually have to give that information back to the IRS and relevant regulatory bodies in the U.S., and they don't necessarily want to deal with it. I think that a lot more firms are opening up the doors as more and more U.S. citizens make the move. But for right now, we're really stuck. And we certainly provide a lot of options to U.S. citizens to help us get unstuck. But we certainly don't have access to some of these same type of tax saving tools. So we certainly have to be a little bit more creative on the US side. Now, what Henry was talking about on a lot of those different aspects, such as selling the house and making sure that we get some of these capital gains exemptions if you're not going to buy a new house in Portugal, that certainly still holds true. but that limited access to financial products, both in the EU, and then also once you make the move, your financial advisor in the US is most likely unable to continue to help you out. And so that's certainly, thank you, Henry. And I'll try to be better about giving you the nod there. But that's where we certainly can come in and look at some of these options, right? In Portugal particularly, I have found that a lot of retirees don't necessarily want to start taking their required minimum distribution from their investment accounts starting at now 73. And so, particularly in a higher tax environment than what you were most likely living in the US, we want to make sure to mitigate those types of tax consequences, push those back until a later day, and so that we can really, instead of having those RMDs at 73, maybe we can move a portion of that to 85 through different tools such as a QLAC. Now, we have to prepare some of these before you actually make the move, so certainly something to think about. As you make the move, one other thing that we need to be wary of as US citizens are PFICs, or passive foreign investment companies. Now, that can be a foreign mutual fund or ETF, or even tools like some of these investment compliant bonds. If somehow you sneak through the door with a separate passport on some of these tools, and they really complicate our tax filing. Even as we look at this list, right? Things like the FBAR are really going to be standard for US expats, even as we have our daily banking, maybe in a local Portuguese branch that you're going to have over 10,000 euros at some point through the year, where it does need to be on that FBAR form. But as we look at different investments, particularly right now, I have a lot of citizens or US citizens who are wanting to move some funds outside of the US, right? A little bit of let's call it a rocky political climate. And Terrell, it's passive foreign investment company. Sorry, I just saw that come up in the chat. But it's something that we want to be careful of as we make the move from potentially investments outside of the States. We're looking at a lot of investments in the euro for US citizen clients, particularly as the US dollar has been falling, and with interest rates changing in the US, we want to make sure that we're able to afford our new life here in the Eurozone. And so looking at some of these options that are outside of the States can certainly help mitigate this currency risk, but something that we need to keep in mind. I'll try to keep on a little bit better track with the actual presentation, but I certainly want to make sure that we're hitting some of these important points, because they are extremely important for US citizens as they make the move. There's so much information out there, not all of it great, and so want to make sure that I'm hitting some of these key pitfalls for US citizens as we make the move that I just see on a daily basis. Different expats make these mistakes, and so the one in front of us is a big one, right? And a question that I get all the time is, how do I make sure that I am mitigating some of these Portuguese taxes that are going to be higher? And a lot of that just comes down to planning ahead of time, particularly before you become a Portuguese tax resident, especially if we're thinking about moving at some point in 2026. Well, we still have a couple months here in 2025 to start looking at different strategies. A big one, if you don't have any capital gains that you realize this year, is trying to maximize some of those capital gains before you become a part of the flat 28%. That is the Portuguese regime on capital gains. And particularly Americans, retirees that have low income, a lot of times we can look at 0% on those capital gains or 15%. And so we might want to split those into 2 separate tax years. If we're thinking about realizing, and maybe we don't have control over when we realize those capital gains, is we do have control over when we make the move to Portugal, particularly if we move after July 1st, or at least spend under half of the year in Portugal in 2026. And that's a general rule, right? There are some exceptions to that rule. We definitely want to have that chat to make sure that we're not tripping ourselves into being a Portugal tax resident before we're really ready to. But those are definitely things that we want to make sure, because no, we're not going to be double taxed for the most part between the US and Portugal. We will be entering into a higher tax environment that we want to make sure that we're preparing for that accurately. Next slide, please, Henry.
Just Jacob, one thing on the PFICs. I've seen this a lot this year because more and more US connected clients have been really feeling the effect of the exchange rate over the last sort of 12 months, as you and most listeners are aware. People have been wanting to diversifying by looking at euro-based investments, but it's so important to know exactly what you're investing into and working with people who understand this, because potentially falling or investing in something that looks great, but then falling into that PFIX category and causing that major tax headache and liability.
Yeah, I mean, you want to work with someone who's used to working with U.S. citizens, because I would say a lot of the international advisors that we have access to in the EU aren't necessarily looking out for those potential pitfalls like a PFIC, because it increases both the tax consequence of those investments as well as the actual tax filing costs. And so, yeah, I mean, there's definitely a lot of logic between moving your assets outside of the States and into investing in the currency that you're now living in, but you really want to be careful as you're doing so. And a lot of these strategies here to minimize double taxation really tie into that, because we want to make sure that we're also participating. If we are going to move assets outside of the States, we want to make sure that we're doing that in the correct way, particularly with Portugal's blacklist. And so, there's a lot of great sounding investments around the globe in different, what we would call tax havens, particularly, I think the Channel Islands, right, are a big one for UK expats, but US expats currently, can have some investments that are held within the Channel Islands. And really the blacklist is just a list of tax havens around the world who don't participate in Portugal's tax information sharing about their clients. And so it can really lead to some super, super detrimental tax consequences within Portugal if we are utilizing jurisdictions such as these to invest our assets into. And we lose a lot of the benefits of that double taxation treaty when we invest in these jurisdictions that, yeah, on the surface, they sound great until you dive into some of this legislation surrounding them. And so, yeah, it can be really important to avoid that. Otherwise, we're, instead of 28% on capital gains, we're looking at plus 40% on any type of withdrawals from these types of accounts. So definitely want to keep track. We can jump to the next one, Henry. This is a big one. We just spoke about the access to EU investment vehicles, about the need to really prepare ourselves and to jump through some of the hurdles, or to avoid different investments altogether if they're not going to be a good fit. But I found that the majority of US citizens moving to Portugal right now are moving from being employed to retirement, right? Taking advantage of Portugal's lower cost of living. And so really what that means for your investment portfolio is we need to flip the switch a little bit from that growth mindset to that income production mindset and to the wealth preservation mindset. And so we certainly have some great tools that are non-market correlated. And so that we don't necessarily have to worry about your income being predicated on the success of global stock markets, right? Particularly with the US government shutdown, these tariffs, we're seeing all these little spots of doubt in the market that we don't want you depending on your next month's income based upon the continued success of this. And so really getting some planning in place to generate guaranteed income for the rest of your life. Of course, we want to diversify, still be market participants. But some of this investment planning might not necessarily be something that you've seen in the past or really needed in the past, as we're in that accumulation phase of life and switching to that income generation mindset as we make the move. Next one, please, Henry. Perfect. All right. Well, currency risk is really, as Henry mentioned, right? US dollar to the euro now down over 15% since January. Just an absolute slaughter. But it's not going to get any better. So that's not necessarily the best news. With this interest rate cutting cycle, we already had an interest rate cut last week. We're still planning on at least one more before the end of the year. And it sounds like another one in January for a combined 1% cut, considering the two that we've already had this year. And what that does is it's really going to allow the US dollar to continue to slide against the euro. Which makes it tough for us that have our investments in the US dollar and are living in the euro and depending on those US dollars. So really being able to diversify into euros is a great tool. But we want to make sure we do that in the correct way. And even having US assets that are invested in global markets can also be a great way to get some of this diversification. Now, Henry mentioned this a little bit earlier, but we don't necessarily operate under a one size fits all operation, right? We certainly get our input from clients, have them take risk questionnaires, get the best fit for them as we're recommending different investments. And then at the end of the day, it's a discussion, right? We don't necessarily want to force anything down anyone's throat that they're not comfortable with or that isn't going to be a good fit for them. And so as we make some of these recommendations, it can be a dance at times, right? Of feedback and getting that to make sure that what is the end result is something that's going to be the best fit. Perfect. Well, I will say, right, with U.S. retirement accounts, I've been talking about all this diversification into the euro, moving assets potentially abroad. The retirement accounts stay put. For the most part, there are very few situations where it makes sense to move some of these assets abroad into different structures. A golden visa can at times be that right type of structure to be able to do that. Particularly in the Portuguese golden visa program can be pretty compelling. But we want to make sure we do that in the correct way, and that we're really planning for Portugal's laws around that. One other big difference moving to Portugal is the taxation of Roth IRAs. So I speak to so many clients who are doing Roth conversions right now and have been for many years. And it's important to understand the impact of that, because that Roth withdrawal is not necessarily going to be completely tax-free as it would be in the United States. Yes, it's going to be more tax advantaged than a traditional IRA distribution, but we just want to make sure that it makes sense for you even before you make the move. Particularly, and this is something that I've noticed a lot of clients haven't necessarily been thinking about, is the 5-year seasoning requirement of those Roth IRA funds. Once they've made that Roth conversion from traditional funds, they have to wait 5 years to access that. Otherwise, they might have not done it in the first place. And so certainly something that's important. Now, on this screen, right, we're also looking at local pension schemes. Now, US citizens can certainly participate in local pension schemes, but again, we want to review those underlying assets to make sure that it's going to be in the best interest. Obviously, government pension schemes are going to be compliant within those dual taxation treaties, but for those private pension schemes, there can be a lot of obstacles and hurdles and things that maybe we don't necessarily want to get into as US citizens within those that those pension providers don't even think about, just because it's traditionally been so few US citizens who are contributing to these types of pensions. And when I say pensions, right, a lot of US citizens think kind of US style of pension, which is a more of a deferred compensation plan. as opposed to local pensions, which act more as 401k IRAs and are more of that type of structure. And so that's certainly a huge point of confusion for US citizens moving abroad when they hear about all of these types of pensions, where it doesn't fit exactly the definition of pensions that we're used to here in the States.
Mm-hmm.
Next slide, please, Henry. Okay, perfect. Well, I did mention a little bit about the U.S. retirement assets abroad, right? We want to be extremely careful. Now, a lot of people lump in retirement assets as also their taxable funds, that they're bookmarking for retirement. And so those are really the ones that we can look at moving abroad. But otherwise, and I have had this question more so than ever, is how do I move my IRA abroad? And there are ways to do it. They are not necessarily right and a good fit for every single client, but through a self-directed IRA LLC, we can look at some of those options where we still keep that structure of the IRA within the United States, but we are able to diversify offshore and be able to make investments within the EU and globally. We just want to make sure that we're doing that in the correct way. Again, and that's certainly something that we have the legal team in the US to make sure that we're setting that structure up correctly, as well as ourselves who can help make sure that we're making sure those funds are invested correctly as well. Next slide, please, Sam. Perfect. Now, for Portugal, right, estate planning is certainly a lot easier than other EU countries, such as France. And so I actually have quite a few clients who were originally thinking about France, and after learning some of those inheritance tax laws, have chose to make Portugal their future home instead. There is no inheritance tax in Portugal, but we still want to make sure, right, that as U.S. citizens, we're preparing ourselves correctly by having a Portuguese will, typically, that mentions our U.S. will, and our U.S. will needs to mention the Portuguese will, and that it supersedes the Portuguese will. And the Portuguese will needs to make sure that the U.S. will supersedes that local will, to make sure that it's going to be a smooth transition and that both governments can really get on the same page and agree.
Yeah, well said, Jacob. Our webinar last week was about this, which we invite people to review. It can catch people short, but great to hear that it's a favourable situation compared to France. But you've got to make sure that that bit of connection between the two wills is in place, as you quite rightly point out there. So thank you for mentioning that.
Of course, and one big thing for U.S. citizens, right, is so many of us have trust before we make the move.
Yes,
and Portugal, a lot of times, right, they disregard the trust, and so that's where it's important to really have both pieces in the U.S. In place, but also that Portuguese side in place. And so, man, I was telling you guys about how rainy it was, and now the sun is just right behind me. But no, that's it's definitely an important piece, particularly for those who have heirs, that they have very specific planning for and assets on both sides of the ocean to make sure everything is in order on both sides.
Yeah, well said.
Yeah.
Perfect. And so this is what I was just alluding at, right? Is that it's not one size fits all. So we create custom portfolios for our U.S. expat clients, potentially custom geographic locations, right? Whatever makes sense. We implement different options both in the U.S. and abroad, and really can show you multiple different ways of putting your money to work for you, and what's going to be your in your best interest. We also work with cross-border tax professionals to be able to give the best advice. A lot of times we get on calls with them in order to make sure, before we press the button and implement any type of financial planning strategy, that the whole team is on the same page before we before we do so, in case there's any additional planning that needs to happen, or if at the end of the day, right, that tax advisor has a different idea on how we want to structure different assets, which can be extremely important as we look at the cross-border side.
Yeah. Just to touch on that, although it does say we support US expats in Portugal with these things, this does replicate to non-US as well, but the US is obviously a lot more complex, unfortunately, due to that double taxation situation that you're in. But yeah, we can provide bespoke financial planning to non-US residents, international portfolios, various currencies, but yeah, a bit more complex for US connected clients.
Perfect. So to get started, right, and we've mentioned a couple of times, reach out, set up a consultation with us, right? We have initial free consultations. And I would say this probably happens with Henry quite a bit as well. I know it does with myself, is that those initial conversations, right, we're not necessarily trying to charge for that second, third consultation. We want to make sure that we are providing the best possible advice to you. So yeah, certainly book a conversation with us. I already see a question in the chat there, right, of who to book with. US citizens, right, go ahead and book directly with myself. And all non-US citizens book with Henry. Of course, US citizens, right, if it's easier to book with Henry initially, always, I know he's welcome to have a chat and see if it makes sense to me for me to be brought in as well.
Yeah, so I do have my trusty QR code. I was trying to set one up for you, Jacob, as well, but I didn't get one in time, unfortunately. So if you
So
do
he
want to
says,
speak
Jacob.
with...
So he says. He just wants to be the only one with a QR code, I think.
So if you scan the QR code, that will, fortunately or unfortunately, come through to myself. We can touch base. If it is better suited for Jacob, then we can go ahead and set that meeting up with Jacob. But unfortunately, poor Jacob, I wasn't able to get a QR code set up for you.
Next time,
Henry just wants to have a chat with everyone.
I think that's probably
That's
part of
what
it
it
as
is.
well, isn't it? The friendly face of Holborn Assets there. I think your QR code is trending on X at the moment as well. It's very popular. Some people come to the webinar just to see it. So there you go. The details for getting in touch with Henry and, of course, Jacob on the screen. There are various means for doing that, however you prefer your technology. Is that everything from you, gentlemen? Can we go to a few questions and observations in the chat that we've got tonight?
Yeah, let's jump in with some Q&As.
Great. Okay. Well, we'll leave the contact details on the screen there and go back to the beginning there. Good to see Terrell here this evening. If you're a USA citizen already living in Portugal but have not started pulling any retirement funds managed portfolio by employer and have 8 years left on NHR, what are the best next steps? Is there still time to save taxes? And I think you've answered your own question in a way there, Terrell. Is it best to speak with Henry or Jacob? Maybe you'll be addressing this already. Thanks. I think with that sort of complexity and personal circumstance, it is probably best to get in touch, isn't it? And talk that through.
Yeah, definitely. And I think Henry will also be sending out a recording of this webinar with the ability to book into my calendar directly as well. But depending on your situation, right, there are some ways that we can still save taxes for you, particularly depending on your age. And so that's definitely something that we can take a look at. Like I said earlier, right, some of these Portuguese compliant investment bonds don't necessarily have access to, but there's certainly some tax strategies that might be helpful.
Very good. Okay, thank you. Anthony Tabor, good evening to you. Thanks for being here. UK SIP can be held indefinitely. Is there no tax liability until withdrawals are made? I'm advised ad hoc lump sum withdrawals can be assessed under an 85-15 rule, so only 15% is taxed at marginal rate. Anthony seems to know his stuff there. Do you have a comment on that, Henry?
Yeah, SIPs can be held indefinitely. There's no problem with that. What I was touching on mine was if you were taking your PCLS, which is a tax-free lump sum, it's tax-free as a UK resident, but not tax-free as a Portuguese resident. What we have found with some UK SIPs this year is once you make them aware that you're a non-UK resident, if you have a financial advisor managing that SIP, or maybe doing it yourself, certain providers can put restrictions on your SIP once you make them aware that you're a non-UK resident. And when I say restrictions, I don't mean accessible restrictions, but management of the underlying assets. So something to consider if you're not already a resident.
All right. Hopefully that deals with that question for you, Anthony. If not, do let us know in the chat, and we can make sure that gets resolved to your satisfaction. Yes, talking of acronyms, PFICs. Could you break that down for us again, so that people are aware of what that means?
Yeah, of course. Yeah, passive foreign investment company. Foreign any mutual fund or ETF that is non-US based. Oftentimes, you look at the actual investment. There's the ISIN, which is really kind of the serial code for that fund. And if it doesn't start with US, then it's more likely than not a PFIC.
Okay, excellent. And ETF?
Yeah, exchange traded fund. Excuse me. Yeah, that's
that's what I'm here for. That's what I'm here for.
It's similar to a mutual fund, but it's traded more like a stock.
Great, excellent. Thank you for that, Jacob. You deal with this all day, don't you? So of course you use the acronyms, and occasionally us muggles need a little bit of help with that. So I think, blacklist. I think you dealt with it. It's always when the word blacklist gets dropped in these conversations. Well, what? I think that was resolved to Terrell's satisfaction there. Not a problem for Portugal, of course. Portugal has, I think, unlisted some places just recently. But again, talk specifically about your situation with the professionals here. Is Jacob, so just confirm your email address there for John, jacob.shelton, SHELTON at holbornassets.com. Will that get John connected to you there, Jacob?
Yep, that's correct, John. Looking forward to hearing from you.
Okay. What about for US Portuguese dual citizenship? What are the implications there from Maria?
Yeah, so unfortunately for those who have the dual citizenship, really at the end of the day, the US one is the one that matters. Okay. As far as for investment accessibility and some of the rules we have to follow.
Well, literally America first there in that in that context. What is your familiarity from Todd with US federal retirees and the Thrift savings plan, the TSP?
Yeah, that TSP is a great plan. It's super helpful, particularly when in Spain and Portugal, as it is not taxed. Right. So those is just taxed in the U.S. as a government employee pension, and so it's make sure that it stays in that TSP. Don't roll that over into an IRA. I've seen that mistake made before. It's not necessarily something that we can manage, as it does have to stay in that plan. But it has some particularities that we can certainly give some general guidance on, but can't manage that ourselves.
Okay, that's good. A good tip there. Thank you for that. It's as though, the TSP stands for Spain and Portugal with its advantages here, but that's the Thrift savings plan there. Anthony would like to know, have you seen the 85-15 rule used going back to, what was it called? It was the SIP, wasn't it there, Henry?
For the pension income, the 85% or more. I have, but obviously I'm not a tax advisor myself, so I've not personally advised on it, but I have seen and aware of it. But
okay. Well, Pedro Franco's name did come up, our taxation specialist at EI, so you may want to talk with him about that as well. I'm sure we'll have a webinar soon on the Portuguese taxation with Pedro, the increasingly popular Pedro Franco, who connects with your US tax folks as well. He's, of course, with EI over here in Portugal. We're US Irish citizens living in Portugal, says Brian. Does that complicate things more? Irish citizenship via ancestry, non-voting, and we have no assets there. Also says Pedro is a great guy. What do you say to Brian there on that, Henry? Do you want to pick that up? US Irish? Oh, maybe Jacob. US Irish citizens.
Yeah, if they're both US and Irish, then it would have to go under sort of Jacob's remit, then, wouldn't it, Jacob?
Yeah, at that point, that Irish citizenship again doesn't necessarily
No.
matter too much in this circumstance, other than the ease of living in Portugal, though, which is obviously great.
Yeah.
But for the financial and tax planning, that's all the US side.
Okay,
Yeah.
very good. Thank you. Linda Corrin, is an international will enough for US expats? Well, it would appear not enough from our last week's webinar. I don't know if you've got a comment on that, Jacob. You do need to get it configured both sides of the water, don't you, for best results?
Yeah, for best results, easiest for anyone looking after those assets after something happens to you. You want that US will, and you want that Portuguese local will.
Yeah, and Linda
Yeah.
continuing, what is problematic? I think it is pricked up there when you mentioned ETFs. What is problematic with mutual funds and ETFs? Could you reiterate on that?
Well, it's not necessarily mutual funds and ETFs, although once you do move to Portugal and are a Portuguese tax resident, you won't really have access to mutual funds any longer. And there are only certain ETFs that you can access. But it's really foreign mutual funds and foreign ETFs that we have to be more careful with, as that falls under that PFIC category.
Okay, so careful rather than necessarily problematic there, Linda. Hope that helps. And anonymous attendee, you can always attend anonymously and ask questions, as this person has done. Does the concern with PFICs apply to assets within an IRA in the US, Jacob?
No, they wouldn't. If that IRA is in the US, that is not a concern, as you wouldn't really have access to any
Right.
PFICs. It's only once we move assets offshore that we really have those types of concerns.
Okay, and that's everything as far as I'm aware. Oh no, a couple of extra questions coming in. Neil, while not tax-free in Portugal, is there any disadvantage of maintaining an ISA in the UK if investment gains are realized and reinvested prior to becoming tax resident in Portugal? From Neil to you, Henry, on that one.
Interesting. It depends. It depends on the strategy. If, let's say, you're having an active approach with your ISA, let's say in 2 or 3 years, economic cycles or situations change and you want to amend your strategy or the investments within there, or reduce your risk profile down and become more defensive, buying and selling within an ISA also triggers a taxable event. So unless you're just investing into one strategy that you're going to leave for as long as possible, and then you don't mind paying tax on that, then it's absolutely fine. But there are alternatives that are more tax efficient and better for the management side of things, which will in turn better the performance over the medium to long term. So that's mainly the disadvantage, really. Yeah,
There you
and
go, Neil.
also
Yeah.
estate planning as well is another consideration, given now that the UK is changing from domiciled inheritance tax base to residence. There are strategies that you could potentially reduce any potential inheritance tax liability down. But if you keep it in an ISA, it's a UK asset subject potentially to UK inheritance tax.
Right, thanks, Henry. And who knows what might happen in the next budget? There's quite a lot of
Exactly.
excitement around that. Some signalling going on intensely and intently at the moment. So yes, we'll keep an eye on that as well for those UK expats here in Portugal. And finally, then some compliments and some positive feedback. Diana, thanks for being here. Excellent presentation, and thank you for your candor in answering these questions. It's comforting to hear that Holborn operates on one size fits one, not one size fits all basis. I wonder where you were going with that, Diana. But yeah, one size fits one is a good. That's another acronym for us tonight. That's the OSFO. You can use that, guys, if you want to. strictly hashtag OSFO. What is the general profile of the US expat who would best fit with the bespoke services and expertise that Holborn provides, i.e. in terms of fungible, love that word, fungible net worth, risk profile, lifetime goals? Do you have a particular avatar, or is that best figured out by someone giving you a call to see how you can best help them?
Well, I'll kind of give this as far as guidance, right? We can work with any type of risk profile, any type of lifetime goals. We do have a minimum of investable assets of 250,000 USD. That's just really a lot of the institutions that we work with have that minimum, and so we can certainly potentially look at options if there's less than that. But as far as a holistic and ongoing relationship with Holborn, 250,000 is really going to be that minimum for investable assets to work with.
Thanks. That's really helpful and direct. Anything you would add on non-US, Henry, there in terms of profiles?
Yeah, I was just going to say, it's not necessarily that we have a minimum investment criteria. Like Jacob said, it's the products that we work with, but more importantly, it's about whether or not we're going to be of added benefit to each and every individual situation. So, yeah, there are times when certain products that are a best fit have a minimum criteria, but we as advisors and as a company don't technically have a minimum. It's whether or not we're going to be relevant and beneficial to your situation.
Yeah, and add some value. Understood. And thanks so much, says Terrell, for the degree of information you've shared already in this webinar. I understand advice will need to be personalized, but Terrell, happy tonight as well. And simply from Brian, excellent webinar, guys. So thank you very much on that note. Oh, no, sorry. No, more Q&A just very quickly then. What are the foreign ETFs that you referred to? Can you add anything on that, Jacob?
Well, Linda, most of the ETFs that you've seen in the past, right, are probably just US based, but there are different funds all over the world and different, fund companies in Dublin, for example, right? Because there's quite a few funds based out of Dublin. And so those ETFs that are located in Dublin is where we wouldn't necessarily have that access.
Okay.
Yeah.
All right. Thank you for that. For Linda. Thanks for being here, Linda. Nice to see you tonight. And Laurie, do you have a typical fee for managing portfolios? I guess that's very unique and OSFO, isn't it? That will vary according to the individual.
Yeah, exactly. It depends on many factors, but mainly about the complexity of the advice, whether alternative partners are required, the assets under management. It all plays a part. But after that initial meeting with either myself or Jacob, we'll have a clear understanding as to sort of the route that we're going down and the expected fees. And then we can put that into a sort of email format advice to then send over to you for us to then run through together. So it's all transparent and clear if we get to that stage.
Great. That's for you, Laurie. And thanks also, Carl, for your always great webinar stewardship and humour. My pleasure, Terrell. And a final compliment for the chaps here. Very informative. Thank you so much, says Todd. I just scheduled an appointment for tomorrow. So perhaps the QR code is working there, whichever method you use. Todd, thank you for doing so. Yes, the details on the screen there for a few more seconds. Just time enough to say thanks so much to Henry Kent and Jacob Shelton of Holborn. Enjoy the rest of your day. Jacob, thanks for joining us from the United States. And Henry, thanks for joining us from the Algarve here in Portugal.
Thanks for having us, Carl.
All right.
Cheers. Have a lovely evening, everyone.
Yeah, and we'll see the Expats Portugal members at the Premium Lounge a little bit later on this evening, which is one of the great benefits of being an Expats Portugal member. So see you guys there. And yes, thanks, Henry. Thanks, Jacob. Thanks, everyone, for being here this evening.
Looking for a place to call your own, where the sun shines bright and the seeds are sown. Portugal, it's the place to be.